One of the biggest conversations right now is the AI bubble. And the question is Nebius, CoreWeave, some of these other names, are they the big bubble names out there right now? Now we're going to go into exactly why Nebius is dipping, because again, they just missed earnings and also the market had a little bit of a dip on the day. But we're going to talk about, is this a buying opportunity, and everything about them as well that you should be looking at for yourself. Now, Nebius has been one of the most asked about stocks probably on the channel. I just haven't talked about it because they've been going up in a straight line. But you guys know, as stocks dip, that's usually where I like to strike. That's usually where I like to buy. And so now this is that opportunity of, do we start buying? So we're going to do a technical viewpoint and a fundamental viewpoint, going as deep as possible. Pause into this as well. Now, before we go too far, I do want to say a few things. If you guys want to see exactly what we're doing, how we're trading, the Discord link is down below. You get access to literally everything. And I'm going to tell you right now, like today is one of those days I didn't post literally any trades except futures. I only post trades that I am personally entering. So again, if the trade's lackluster, if the day's lackluster, I'm just not going to enter. So again, some people like that, some people don't, but you'll always know that if the trade's a high quality, that's the one that I'm entering. That's why I'm posting it. So it's all there for you. You can see the losses, profits, everything in between. It's all there for you. We mention a lot of stuff in Discord as well as far as other opportunities. Guys, this is crazy. This guy's literally up like 50K in the month. That's actually nuts. Congratulations. Or as of today, that's nuts. Congratulations to him. But anyways, Discord link down below. Let's get to work. Now, going into Nebius, let's start first. Now, if you don't know, they missed earnings. So again, really quickly, just showing you their report. As you can see down here. So again, they were estimated 155, came out 146, and some of the other earnings as well, just to show you overall growth. Previous earnings were 105. Previous earnings before that were 55. So you can see you're growing pretty quick, right? It's worth mentioning they are not profitable either. Very important to understand that, but they are on the pathway. They are moving closer to that, as you can see. So the first thing I do want to associate with what's going on while you're moving up, was this constituted? Was this logical? What's happening? I think it was logical why Nebius was going up. The earnings are going up by drastic numbers. I mean, you doubled from basically May into August, and then from August into this earnings, another 50% overall growth on revenue. That is very good to see, even though you missed. So important to understand that. The other point is now you're getting the opportunity as far as dipping. So I'm going to come back into the charts and we'll talk about where I want to buy, if I want to buy, and what I'm looking at there. So a few things we need to attack is, what do they do? So if you are unaware of what Nebius does, which I was a few months ago or a few weeks ago, but again, let's break this down first. So what does Nebius do? Nebius describes itself as a vertically integrated AI infrastructure company. And again, we're going to try to break this down as simple as possible. We'll say what they say and then go into what they actually do. Basically what it does, it builds and operates large-scale data centers, GPU clusters designed specifically for AI, ML workloads, training and fine-tuning interface rather than just generic cloud servers, okay? It offers cloud stack platforms, AI cloud, combining hardware, GPUs, servers, software, AI cloud platform, and the global footprint to serve enterprises, startups, research institutes, etc. It is targeting the rapid growth of generative AI, large model training interface, where demand in GPU compute is surging. It also holds the business lines and stakes, for example, education, upskilling via Triple 10, autonomy and robotics via Avride, equity stakes in data companies like ClickHouse and Talanka. Now, you always hear me talk about the gold rush, comparing AI to the gold rush and what happened there. Now, let me explain why Nebius, why I kind of took a step back and wasn't trading it, wasn't buying it or anything yet. You see, when we talk about the gold rush, we talk about the companies that we like the most, the companies that we buy the most of are the ones that sell the tools, right? Nebius isn't a tool. They're not the company selling the tools. The one company selling the tools are NVIDIA, AMD, AVGO, TSM, just off the top of my head. Nebius is one of those companies that's mining the gold, right? That's what they're doing. So what they do, breaking it down, is they buy the GPUs from a company like NVIDIA, they build out the data centers, and then they bring in clients, right? Like Meta, Microsoft, these other users, and they use Nebius' product, their data centers, etc., right? And this is how it's going on. Now, it's important we understand that. It's very important that we understand that. Now, what's worth mentioning and something that you want to look for here, and we talk about a lot of growth names, is are you growing, right? That's how these growth names continue to go up. That's how they move like crazy. And as you look here, the earnings are justifying growth. And I would say even now, you're getting a little bit of opportunity. Yeah, you're still not making money, and you missed earnings. However, you're still growing. Okay, very important to understand that. So we'll come back to that in a second. Okay, now Doubling down, moving down to revenue, monetization. Okay, key ways Nebius makes and aims to make money. Capacity leasing, compute services contracts. Nebius supplies dedicated or significant GPU capacity and associated infrastructure to major tech and AI cloud players. Under multi-year commitments, a strong example, Nebius signed a deal with Microsoft. That's very important. We'll come back to that also. For about $17.4 billion over 5 years, potentially up to $19.4 billion. The cloud platform and AI services usage beyond bespoke contracts, it offers its AI cloud environment as a platform for enterprises, startups to use. Training, interface, fine-tuning, think GPU hours, clusters, instant usage. Growth in the upsell via global footprint. So you also see there's a few different ways they're making money, right? Nebius is expanding data centers in Europe, North America, Middle East, scaling capacities to help drive higher volumes, potentially better margins, economies of scale over time. And it's important to understand that the longer they're in business, the more and more efficient they will become as far as getting their margins up and up and up. Very important to understand that, okay? Spin-outs, equity stakes. Some revenue or value capture comes from ownership and stakes in other companies, Talanka, ClickHouse, and other non-infrastructure businesses, units as they mature. Okay, very interesting to see what's happening here. Now, also when you see these deals as they're coming in, like Microsoft could go to 19.4, but it's at 17.4 right now. It's very important to understand that if a company is happy with this, they'll just restructure and give them more workload, right? So it's very important to understand this is like the baseline for right now, but this could easily scale up more. Microsoft could easily double down. And if you look at something like Meta, you look at their CapEx, look at their overall spend, they are looking to spend more money. Microsoft, they're all these companies, Amazon, they're all looking to spend a crazy amount of money. So companies like Nebius, again, yes, these deals, it's important to look at face value, what they're worth, but they could be worth more down the line. Very important to understand that. And so I just want to make sure we understand that before we move forward. Now, competitive positioning and value proposition. Why Nebius thinks it can succeed and why investors buy the story. Okay, GPU, compute for AI, is a bottleneck. Big demand for large models, interface, LLM, large language models. Fine tuning means companies want lots of GPU clusters. Nebius is positioning to fill that niche. Focus on infrastructure rather than a general cloud. By building a purpose-built AI servers, data centers, they aim to differentiate from generic cloud providers. Big contract wins equals validation. Microsoft, Meta being those big contract wins. The Microsoft deal in particular signals that major players trust Nebius's model. That helps Nebius bid for large contracts. And again, I think Microsoft is the big sleeper here. That's the big one when we look at what's happening right now. Now, as we take a step back, that's what's happening. That's basically how they make money, how they operate, what they do. Okay, so if you have questions, reread that. I don't know, do what you gotta do, right? Now, going on from this into what happened from earnings and then the strong signals of demand, the weaknesses, things to look at from there. The environment, strong signals of demand. The fact that revenue rose and has risen almost over like 350% over the past quarter, over the past year really is just nuts, right? And so you really have to be happy with where you're going. And as we look more and more over the earnings, again, like I said, I get it. It's tough. You're not making money. You missed. It is what it is. And then on top of it, you need to look, this is getting over exaggerated the downside today because we opened up strong and then obviously NASDAQ dipped down. You have names like NVIDIA dipping slightly on the day. So it makes logical sense why you're dipping right now. Okay, it does. Now, there are some concern with this gap down here. We'll talk more about that. But again, I think this is a little bit over exaggerated. And I think this is going to be pretty decent opportunity the more and more we look at this, okay? Very important to understand that and kind of how you're shifting. The company itself and its commentary said that every time we bring capacity online, we sell it, right? Come back into that. The Meta deal in particular, an earlier $17.4 billion deal with Microsoft Corporation indicates that hyperscalers are engaging in multi-year infrastructure commitments. They're raising massive CapEx to build out these data centers, power capacity, GPUs, Q3. CapEx is US is almost $1 billion versus almost $200 million a year ago. So again, they're spending basically everything they can right now to grow, which again should justify if they're spending all their money to grow, that their revenue should keep scaling as well. So I think you're going to see this company being at $250 million in no time at all. I think I don't want to say next earnings, but by summer, they'll be at $250 million in my personal opinion, which seems like some time. But again, when you're investing, time goes by fast. That build out is in direct response to the growing demand. Now, this is where things get interesting as far as earnings are concerned. While demand is clearly strong, the company is still, and these are like the worries and concerns, right? The company is still unprofitable and burning cash. That means that business is very capital extensive and scaling is expensive. The company noted that the size of the Meta contract was essentially limited by their available capacity. And I cited this as well for Reuters. The demand is perhaps greater than their current build out. And this is a very good problem to have. And there's one company that's having a similar issue. It's NVIDIA, right? Now, I'm not comparing them to NVIDIA. Again, they're totally different. I explained at the beginning of the video. But again, this is a very, very, very good problem to have, okay? Now, there is a mention of the capacity constraints and timing of risk in the broader industry. For example, rival infrastructure companies cite vendor delays. That means that demand may be there, but the ability to serve it in time is a risk. Okay, so again, you need to also understand that this is the concern for these companies. Okay, because NVIDIA is constantly number one making new chips, better chips. They just are. Okay, so they literally, as they release the Blackwell, NVIDIA comes up, well, guys, our next chip, it's gonna change the world. I'm like, well, Jesus Christ, dude. I mean, what's going on? I guess you're gonna use a Blackwell for 2 years, right? And so important to understand that. And they're also going to be able to change the efficiency, like I said in the beginning, to get those margins up. And so you also have to understand that, more competition might rise. Other companies might figure it out quicker, and they might be able to beat them as far as, negotiating prices and contract size. Now, the biggest thing like that is out there right now is that Microsoft deal, like I said, that like solidifies them as a major player, right? They just signed their first big client. I'm not saying Meta is not a big client, but Microsoft signing almost a $20 billion deal is no joke. So important to understand that. Now, this again is the most exciting part, right? The company noted that the size of the Meta contract was essentially limited by their available capacity. The demand is perhaps greater than their current build out. Now, that again has to be what gets you excited when you're looking at investing in just about anything. And that's why I kept saying, and I still think that NVIDIA, for anyone that says NVIDIA is a bubble, is an absolute, I think it's just dumb, right? I think it's just idiotic to think NVIDIA at this point is a bubble as far as how much money they're just bringing in. Now, when the money slows down, the growth slows down, then I can get on that, and if they get proven a fraud or something crazy, then I'll be, okay, well, this is wrong, but the data was wrong, so we couldn't really jump to that conclusion yet, right? So it's important to understand that. And right now, when you're looking at this is a very good problem to have, especially with, like I said, the contract they signed. So in combination with the Microsoft deal, I think it's huge. Okay, we'll come back into that. Now, it's also important to recognize that number one, they missed on earnings on revenue because obviously the constraints for the Meta deal. And also too, this isn't really being taken into account into any of this yet when we're looking at how much they're really worth, how much revenue they're bringing in, because this hasn't even really started. So this is where things really heat up. And this is, again, for the Microsoft deal, you can go more into this. I might link this down below. So let you check it out if you want, just in detail with what's happening there. But again, this is going to be pretty big. So starting later this year, probably near the end of this year, going into next year. This was announced in September, just to let you know. And now it's like early November. So again, it wouldn't be on their earnings right now. So they might be already addressing it right now. So important to know there. Now going into the risk, or more risk overall. Now again, as much as I like talking about stocks, investing in stocks, I like to be transparent. I like to talk about what the bad, the good, the ugly, everything in between. Again, I try to be as unbiased as possible when I'm looking at any name. And again, although it has a lot of opportunity, there is risk out there. Okay, and you'll notice as I'm going through this, obviously I make and highlight all different worries, concerns, good, bad, all of it. Hopefully you can tell by my tone what I like the most, what I dislike the most, what I even try to highlight it back here. So hopefully that makes sense. I just try to draw this up as quickly as possible and get the video out there for you guys. Okay. So the biggest things right now that we're looking at. As a trader, these are things that I'd be focused on the most. Hardware life cycle. Now this is something that Michael Burry specifically is going in on with Meta, and I believe, what was the other company? Was it CoreWeave actually? I don't know who the other company was. But if you go to Twitter, you can go look at it. Recommend following on Twitter. I'll repost it later for you guys as well. The link will be down below. You can check it out on Twitter. I recommend all the updates there. But the business depends on expensive GPUs, specifically from NVIDIA, like we mentioned, and other hardware. If the hardware becomes outdated quickly and rental rates fall, margins might suffer. We already addressed all of that as well. Okay. Execution risk and cost overruns. Building global data centers is complex, capital extensive, subject to delays, cost inflation, land, power, cooling. Now, I'm really not super worried about. America is, it seems like they're all in. It seems like Trump, he understands what's happening with AI, what's going on, and he is like pedal to the metal. If you're going to do this in America, we want you to go all out. Now, we've also addressed that they're going into the Middle East, Europe, etc. So those players are different. I'm less knowledgeable on the development over there. And obviously, hiccups do happen. So this is very important. And this is going to be very key into fulfilling overall demand and printing more money and growth. So can they build these out? That's the big question, right? Efficiently. Competition, pricing pressure. Big players like Microsoft, Amazon, Google, plus other specialized players are all racing for AI infrastructure. Nebius must keep up, keep costs down. And as a smaller player, this is the big concern as well. You're going to most likely, it's going to be hard for you to compete. It's going to be hard to meet criteria as far as competing with price points as these other companies, and then also giving that security. Okay, important to understand that. Demand, risk, and utilization. If the demand for AI compute slows, model stops needing growth, macro downturn, customer cuts, utilization could fall, leaving idle capacity. Eventually, this will happen. Okay, it's very important to understand this. So that's not me saying there's not. It's very important that, you know, when I say that I'm not worried about a bubble, this or that right now, it's me talking about literally right now. Eventually you're going to hit like a flat line. You're going to hit where like, okay, the growth, the development would kind of slow down, and it's just kind of keeping on pace. The question of when does that happen? Are we there? We're not close to there yet, in my personal opinion. Again, we've already gone very in depth of this as far as what's happening with OpenAI, Microsoft, and ultimately what company can achieve as far as AI is concerned, AGI first, which is a whole nother conversation, right? But once that gets hit, that's going to be like when you probably hit you're probably really close to your benchmark, right? So again, demand risk, we already went over all that as well. Valuation risk, because so much of the story is future oriented, it's a growth stock. If market expectations go unmet, the stock could drop sharply, like it is literally right now. Many analysts point to a stretched valuation, customer concentration. If few clients account for a big part of revenue, losing one could be a big risk, like Microsoft. So this is another big thing. If they aren't able to fulfill Microsoft's demand, right, you have to assume Microsoft, you know, attempts to cut ties, move on, you know, is unhappy. That could be a big thing that could hurt the company. So it's important that we understand all of those risks out there. Now, again, we talked about the bad, talked about something good, everything in between there. So hopefully that was all crystal clear. Now, as we look at the chart, it's already a 17-minute video. I'm so sorry, guys. Let's talk about where you're at and how you're moving. Now, I'm going to go to the 4-hour chart so we can get a better look here. I was previously on a daily. What I'd be looking at here is going to be clearly, you can see all this is just an overall demand going down here, and I stretched it out a little bit. It should really only be like to right there, 86.8, but I stretched out to where that gap starts down here as well, 86.5. In my opinion, this is going to be your first and major support. The question and the concern here now is that you have this giant gap of illiquidity. So what does that mean? What do I mean by illiquidity? Okay, if you're new to the channel, anything like that. Okay, so let's grab this. This is our volume profile, so we can just bring this out and stretch it. So basically, what this does is this tells us where buyers and sellers are, where the most volume was traded on this overall. Okay. And where you're at right now, you can see you have a large volume sum right here at clear as day. Well, when you get below 86.5, you get into an area where there's no liquidity until like $76, $77. So in my opinion, if you start losing that level, you have to expect downside. You have to expect sellers to get aggressive. So again, that is the concern buying here. So I'm not looking to just go, you know, gun ho and start just buying this like crazy at all. I'm definitely going to be on the fence of waiting. So what am I looking at? Even from the stock perspective, I'm still going to be waiting. Okay. Now, if you start coming down to this zone, you start finding buyers and getting out of this, then I'm in favor of maybe getting long, getting aggressive, but I need to see buyers step in. Now, if you start coming down, filling the gap, pushing down towards the gap down here of 64, 65, you have more liquidity, I'll get more interested in buying as well. The other viewpoint too here is going to be your 200 SMA right about there. This is your red line. As you can see, your 200 daily moving average. That's going to be a massive, massive support as well. So there's a few big levels down here right now. And again, I might miss out, and that's totally okay. I'm totally fine missing out on an opportunity to play. It's all about getting a good setup, because if you can understand when you're getting a great setup as far as buying value, you're buying a name that is underpriced, in your opinion or my opinion, that's when you're typically setting yourself up to make the most money. You can't go into with the mentality of like, okay, if I miss this buy here, but then I'm not going to be able to get in. I'm not going to find another stock. I have to make money on this stock, or you know, my account's going to blow up and I'm going to be broke, right? That's not the mentality. It's being patient, waiting for good opportunities and great setups. And so for me personally, you know, I'll be waiting, watching this reaction that you're getting literally right now. It's also worth mentioning you're literally going to get the government shut down most likely around 6 to 7 p.m. tonight is when the vote goes through. Then after it goes to the House, it'll go to the president, so that'll sign. You have to anticipate buying occurs in the market pretty quickly from there as well. So as we look at that, that's personally where I'm at, what I'm looking at. If we can hold here, start buying back up, I'll start buying back on like a reclaim of like 94 to 95. Maybe trade back to the upside. I'm cautiously optimistic on that. I'd be looking down towards like $75, $70 for a bigger and better buying opportunity. that's my personal opinion and what I'll be looking at there. So again, what I'm looking at, if you have any questions, comment down below. I'll have more updates coming on Nebius. I might be doing CoreWeave pretty soon as well. Have a good one, traders. See you in the next video.